This morning, our next guest does expect a rate cut to come in September. Joining us this morning to discuss is Evercore ISI Vice Chair Krishna Guha. Krishna, welcome back. Good to see you again.
Great to see you.
Doesn't sound like you expect any change today, even on the dots, but what kind of soft guidance do you think he might give about the fall?
Look, I think that the Fed's going to stay very much in wait-and-see mode today. Now, we've had some interesting data come in, right? The top-tier data for May, pretty reassuring, right? The labor market, unemployment, payroll gains, still looking pretty solid. An inflation report that was good, surprisingly didn't show inflation pressure from tariffs even in goods. So far, so good. But as you guys know, housing starts, the wider retail sales, some softness here and there. And I think the real point, as far as the Fed's concerned, is it's just very early days. And I think they're going to learn a lot more from the data over June, July, August, and going into what they're teeing up as that decision point, go, no go, in September. So I think that's going to really be the main thrust of the meeting today. I think the key Fed leadership figures will continue to signal a two-cut baseline. The median is close to a coin toss. Could have a couple of individual policymakers defect from 2 to 1. My hunch is it'll stay 10-9 in favor of 2 cuts. Could be 9-10 the other way. But I think Powell will look at this and say, look, you can see from this close division between Fed officials as to what they think might be appropriate, but it really is going to depend on how the data evolves.
I know you can't read too much into what the president is calling for Chair Powell to do, which now is 250 basis points of cuts, 2.5 points. However, his term is up next year, and the president appoints the next Fed chair. So are we looking at a scenario next year where there might be probably less pushback, more independence, and a lot more rate cutting?
So certainly, you're already seeing folks in the market put bets, right, on the idea of the Fed shifting more dovish after Powell's term expires in May 26. But remember, market will continue to impose a constraint on whoever Trump picks to be the next Fed chair. As one of your colleagues was saying a minute ago, right, if you do cut front-end rates by more than is appropriate, given economic conditions, given inflation pressures, what will happen is the market will start to expect more inflation. They'll start to worry that Fed independence is being eroded away, even if you don't have that dismissal issue because Trump's got his own guy in place. And that would actually put upward pressure on longer-term yields. You could end up with yields that are higher, not lower in that environment. Steeper curve, for sure.
That's like emerging market stuff that, less independence of the central bank. Is there truth, though, in the, he calls him too late Powell. You just laid out some of the economic downside risks and softening evidence that we're seeing, while we're also seeing softer pressure on inflation. Is there a risk that the Fed is too late when it comes to cutting?
So look, the Fed is not infallible, and there's always a risk the Fed could be late or too early. I think the key fact that isn't properly represented in the president's comments is that there are risks on both sides of the deck, right? There are downside risks relating to growth and employment, but there are upside risks relating to inflation, specifically the idea that tariff inflation might not turn out to just be a one-time thing, could start to get embedded in the underlying inflation process. So what the Fed needs to do is to exercise two-sided risk management. And right now, that, I think, reasonably calls on the Fed to stay on hold, accumulate some more information. By September, my hunch is that on a slim balance of probabilities, I think we'll have seen enough weakening in the labor market for the Fed to judge that that risk balance is best served by cutting rates to lean against a deeper weakening in the economy. But there are two-sided risks, not one-sided risks. If there were no inflation risks here, for sure, you would be cutting rates now just to take out some insurance on the labor side. Two-sided risks mean you need to stay on hold for the moment.
All right. Certainly echoes what Powell has said to date, and we'll see what we get this afternoon. Krishna, as always, our appreciation. Thank you. Krishna Guha.
Anytime. Good to see you.